Good morning and Jai Hind. In previous video we have discussed the depreciation, its special features and the causes of depreciation. In this video I am going to cover the need or importance of depreciation and its factors determining the amount of depreciation. So let us see the need or importance or objects of providing depreciation. First is for ascertaining the true profit and loss. To calculate the true profit or loss, it is important to include all the cost and all the revenues. And depreciation is considered as a non-cash expense. So it should be included in our profit and loss account on the expense side to represent the correct profit or loss of a company. Next is for showing the true and fair value of the financial position. So, if we do not consider the depreciation while writing our balance sheet, then we are going to write the value of an asset at its historical cost. If we don't apply depreciation, then we have to write the historical cost, or we may say uh, the price at which we have purchased that asset, and it won't represent the true value of that asset, because as the time passes the value of that asset reduces. So we have to mention depreciation in our financial accounts, or we may say in balance sheet, to represent the true value or fair value of the financial position of a company. Next is to ascertain the accurate cost of production. I have told you that depreciation is considered as a cost. It is a non-cash expense. To calculate the true cost, it is essential to include depreciation in our books. Next is to provide funds for replacement of an asset. Depreciation, though debited to PL account, is not paid in cash, but the amount of depreciation is retained in a business and is used for the replacement of fixed assets after the expiry of their estimated span of life. It is a non-cash expense and it is written on the debit side of PL account, and it helps us to recognize the time at which there is a need for replacing our old asset with a new one. Next is to prevent the distribution of profit out of capital. So if the depreciation is not charged, then the net profit which we achieve at the end of a PL account, then there would be a excess profit than the actual one. That means it represents more profit. In fact, the actual profit was less, but it represents more profit, more than the actual profit. In that case, it would and we know that whenever there is a excess profit, we have to distribute that profit among the shareholders as a dividend, or the proprietor may take away from its capital also. So the profit will go out of the company, and in fact this is not the actual profit, and it is in fact the depreciation which is going to be taken out from the company, and it is not beneficial for the company. So it is very much essential to include depreciation in our profit and loss account preparation. Next is to avoid overpayment of income tax. As we know that whenever there is a profit, a company has to pay income tax, and if our accounts shows profit which are more than the actual profits, then we have to pay more income tax. which is obviously not good for the health of the company. So we have to include depreciation in our books. Other objectives. Objectives like whenever a company shows a huge amount of profits in its profit and loss account, then employees may demand increase in the wages, and they may also demand for bonus. And sometimes it may happen that company may used to uh, purchase unnecessary things, or it may happen that it may increase the competition in that type of business. Now let us see the factors determining the amount of depreciation. So what are there are actually three things which one should know to find out the depreciation. First is the total cost of the asset. That means at the time of its purchase, whatever may be the cost, that should be there, and including that, if there would be some additional or expenses which occurred for bringing the asset to the usable condition, just like freight charges, transit, insurance, installation cost, and in fact the wages also, then those expenses should be added in the cost of the asset, and that will become the total cost of the asset. Next thing that one should know is the estimated useful life of the asset. It is obviously an estimated. We cannot say the accurate life of the asset, but it is an estimated that either 10 years, 20 years, whatever it may be, it that much lifespan of the asset should be known at the beginning of at the time of the purchase of that asset. And it may happen that in the middle of its time span the asset may got obsolete, then up to that time only the useful or estimated or useful life of the asset should be considered. As example is given here, that after 15 years uh, the machinery got obsolete, then the useful life of that machinery would be considered as 15 years, not the 20 years which was the estimated at the time of the purchase of that asset. Next, the third thing which we should know is the estimated scrap value. Scrap value is the is the sale value at the time when the useful life of the asset was matured. That means asset has been used for his whole life, and at the end of that, if a company is selling that asset, then at that moment whatever the company receives would be termed as the scrap value. It may happen that it may differ from the book value in practical case, but these three things should be known for the calculation of depreciation. You can see that there's an example over here where a machinery which has an expected life of 10 years and scrap value of 8,000 with a purchase price of 60,000, and 5,000 has been spent on the freight and the installation. So the depreciation has been calculated. Initially, the total cost of the asset, which would be termed as 60,000 plus the installation charges and the freight charges, that is plus 60,000 plus 4,000 plus 1,000, and from that we have to subtract the scrap value, that is 8,000, we get 57,000, and this 57,000 has to be distributed equally for the 10 years. So it has been divided by 10, it gets 5,700 rupees every year. That means by this much amount, the value of the asset is going to reduce year by year. With this, I am going to end my video. Thank you.